For months, maybe even years, you've heard the whispers, Cardano, the sleeping giant. Well folks, I'm here to tell you, that giant isn't just stirring anymore, it's wide awake, and it's been making some very strategic plays behind the scenes. We're talking about a cryptocurrency, ADA, that has clocked over $381 billion in trading volume in just the last 12 months alone. Let that sink in. $381 billion. That's not just impressive. That puts Cardano right up there with the heavyweights of the digital asset world, a testament to its growing market adoption and liquidity. But here's where the plot thickens. This isn't just about big numbers. It's about a clandestine strategy, a DeFi innovation that could catapult Cardano into an entirely new league, a move that could see ADA accumulate hundreds of millions in Bitcoin without ever selling a single ADA token. Intrigued? You should be. Because while this sleeping giant is making its moves, it's also locked in a brutal range battle, a price war that could determine its immediate future. The tension is palpable, the stakes, higher than ever. Alright, let's peel back the layers on this. For my seasoned viewers, you know that Cardano's blockchain fundamentals are second to none. Charles Hoskinson and the IOHK team have meticulously built this beast, focusing on peer-reviewed research, scalability solutions like Hydra, and a robust decentralized governance model. This isn't some flash-in-the-pan meme coin, this is serious blockchain infrastructure. And that commitment to strong fundamentals is why, despite the choppy waters of the crypto market, Cardano's tech just keeps evolving. Now let's talk strategy. This is where it gets absolutely fascinating. My good friends over at Coin Bureau, absolute legends in the crypto analysis space, recently dropped a bombshell. They floated an idea that, frankly, blew my mind. What if Cardano could leverage its native token, ADA, as collateral in the decentralized finance ecosystem to borrow stablecoins and then use those stablecoins to quietly, consistently acquire Bitcoin? Think about that for a second. This isn't about selling ADA to buy Bitcoin. This is about using ADA to borrow against it, maintaining your long-term position in your native asset, while simultaneously expanding your crypto portfolio with the king of crypto itself, Bitcoin. It's a genius move, a strategic masterclass in capital allocation within DeFi. The beauty of this strategy, if implemented correctly, lies in maintaining a low loan-to-value ratio. For those unfamiliar, LTV is essentially the size of your loan compared to the value of your collateral. Keep that LTV low and your risk of liquidation, that terrifying moment where your collateral is sold off because its value dropped, becomes almost negligible. Imagine a major blockchain project like Cardano with its massive market capitalization, quietly accumulating hundreds of millions, possibly even billions in BTC, all while preserving its own token. This would be a monumental shift, a demonstration of sophisticated treasury management and a powerful long-term investment strategy. What do you think about this? Drop a comment below. Is this the ultimate play for a network looking to solidify its position in the crypto hierarchy? Is this the kind of innovative finance we need to see more of in the Web3 space? I'm telling you, this is a game changer if it comes to fruition. But here's the stark reality, the immediate challenge, the very real market dynamics that Cardano is grappling with right now. While this long-term vision is brewing, ADA has been, to put it mildly, stuck. It's been caught in a relentless, range-bound trading pattern, a frustrating sideway drift that has tested the patience of even the most devout ADA holders and crypto investors. All eyes are fixated once again on the dreaded 54-cent support level. We've seen this movie before, haven't we? ADA dancing around this line, teasing us with potential breakthroughs, only to snap back into its familiar range. It's like a high-stakes game of ping-pong, and right now, ADA is just undecided, neither here nor there. Esteemed crypto analyst Ali, whose insights I often follow closely, recently chimed in on X, and his chart, simple yet profoundly clear, echoed what many of us are observing. He suggested that a revisit to 54 cents might actually be a decent entry point for those looking to accumulate ADA. Why? Because that level has already proven its mettle, providing strong rebounds not once but twice. It's earned its stripes as a critical price support zone. But even with that, the current momentum is, well, lacking. Let's break down this frustrating dance. Around June 23rd, ADA dipped close to 54 cents, found some footing, and rallied up to about 59 cents. A glimmer of hope, right? But that push fizzled out. Another plunge brought it right back down, tapping that crucial support again earlier this month. And what happened? Another bounce, this time climbing closer to 60.5 cents. But then, the predictable happened. That upper resistance zone around 60.5 cents? it slapped ADA right back down. Since then, we've been caught just under 57.5 cents, kinda drifting sideways. The technical indicators aren't really screaming buy or sell. Volatility is minimal, and honestly, there's no strong conviction from either the bulls or the bears. It's a nail-biting waiting game. This isn't the exhilarating price action that new crypto traders dream of. This is the grind. The 54-cent mark is becoming Cardano's backbone. It's been tested, poked, prodded, and yet, it hasn't cracked. This resilience offers a sliver of confidence to buyers who are looking for a prime spot to reload their bags. Historically, every bounce from this level has sparked at least some short-lived momentum, giving it significant weight as a psychological support level. Meanwhile, that formidable resistance around 60.5 cents, it's like an impenetrable fortress. ADA has attempted to breach it, failed, tried again, and still no luck. Unless the Cardano bulls can muster some serious firepower, some significant buying pressure, we are likely going to keep ping-ponging within this range for the foreseeable future. This is the agonizing reality of crypto market cycles, folks. So what's the play here? Patience. As Ali's analysis suggests, and as many seasoned crypto veterans will tell you, in a range-bound market, chasing green candles is a rookie mistake. The smarter money often waits for the dips, for those crucial support levels to be retested. So, he's actually eyeing zones like 54 cents for potential trade entries instead of, just giving into FOMO and betting on all that speculative breakout hype. This kind of mindset honestly fits perfectly with effective range-bound trading strategies. You wait for the pullbacks, accumulate when there's weakness, and really try to avoid that urge to buy into those quick, momentary pumps. The overall market sentiment right now is, well, pretty calm. We're not seeing any massive spikes in trading volume, and there aren't any sudden dramatic price jolts. It's a classic wait-and-see moment for the whole crypto community, with both institutional investors and retail traders really watching these same key levels closely. The big question hanging in the air, the one we're all pondering, is simple. What's Cardano's next big move? Is it up, finally breaking out of this frustrating range and potentially heading towards new highs? Is it down, a deeper retest of lower support, perhaps even a capitulation? Or is it simply more sideways drift extending this period of consolidation? For those of us who believe in the long-term vision of Cardano, this period of consolidation, while frustrating, could be an opportune moment. It's giving the project time to build, to strengthen its ecosystem, and for the market to eventually recognize its true value. So, keep a very close eye on that 54-cent line. A decisive break above 60.5 cents, especially on significant volume, could, signal the start of something big. A break below 54 cents could honestly signal further short-term weakness. Please remember, the cryptocurrency market is, well, highly volatile and inherently risky. Everything discussed in this video, including price predictions, market analysis, and potential strategies, is really just for informational and entertainment purposes only. I am not a financial advisor, and this is definitely not financial advice. You could lose money investing in cryptocurrencies. Always do your own thorough research, consult with a qualified financial professional, and only invest what you can afford to lose. Past performance is not indicative of future results. So be smart, be safe, and, really take the time to understand the risks involved in this exciting but honestly pretty unpredictable digital asset class. If you found this deep dive into Cardano's current state and its future potential insightful, go ahead and smash that like button, subscribe to the channel for more cutting-edge crypto analysis, and hit that notification bell so you don't miss our next video. Let me know your thoughts on Cardano's strategy in the comments below. Do you think ADA as collateral for Bitcoin is a game changer? Or is this range-bound action going to last longer than we think? Until next time, stay safe out there in the crypto Wild West, and remember to always stay educated.